Hi there, everyone. For all of our early attendees, I'm Carly Ward. I'll be moderating today's session, and we're going to wait for a couple minutes to have everybody flow in. But while we're waiting for all the other attendees to join, feel free to drop in the chat where you're from and what type of builder you are. All right, well, we're going to go ahead and get started here in just a minute. For those of us that are just joining in, my name's Carly Ward. I am Buildertrend's Partnership Manager, and we have Peter Rasmussen here with us today. Again, for those of us that are just joining, feel free to drop in the chat where you're from and what type of builder you are. But really appreciate everybody joining us this afternoon. We're going to dive into everyone's favorite topic, insurance. So before your eyes glaze over, this is not going to be your typical dry insurance conversation. This is going to be very direct, honest, and hopefully a bit of a wake-up call for some of you. We all know that insurance is one of those necessary evils, but because of its complexity, and let's face it, it's not the most exciting topic to talk about, it's often treated as a checkbox item. You buy it, you renew it, and then you move on. But if you're relying on someone else to just handle your insurance without really understanding what's truly covered, you could be facing or setting yourself up for way more risk than you think. We talk a lot about at Buildertrend about taking control of your jobs, your schedules, and your budgets, but insurance is often left to the wayside. The problem is oftentimes when clients are facing when it does become a priority, it's often too late and we can't pick up the pieces at that point. And I've actually seen this firsthand. A few years ago, I was working as an on-site consultant for Buildertrend, and I worked with a builder that ended up coming into a really horrific scenario. They were working with a couple of homeowners that had purchased a home, and they were doing a full home renovation for them with the anticipation for this to be their forever home. Well, they quickly found out that there were a ton of major issues with this home. There was structural damage, electric wasn't up to code, plumbing wasn't up to code. I'm sure some of you have faced these nightmare dumpster fire stories before. But they were already a couple $100,000 into the project without barely any work being done. And one day, one of the owners came on site towards the end of the day with a project manager and all the subs still on site. They ended up leaving and saying that they were going to come back later in the day. And fast forward to about 6:30 that night, they received a company-wide email from these clients with a picture of the house engulfed in flames and saying that the fire department was on their way. So it quickly evolved into a terrible scenario with a fraud investigation, arson fraud, excuse me. There ended up being three investigators looking into this, one from the city, one from each insurance company. And my clients had a couple of things going for them. One, the investigator representing their insurance company used to be employed in the arson division for the FBI. And were also using Buildertrend exceptionally well, daily logs and time clocks. So to make a long story short, they were able to prove without a shadow of a doubt that this fire was actually started after the crew had left for that day. And it was in fact started by the homeowners. So this is one of those worst case scenario situations that you hear about, but you hope never is going to come across your door, which is why today's session is so important, why we brought on Peter. He's worked with tons of builders over the years and has seen behind the scenes what can happen when companies take their insurance policies really passively. So he's going to walk us through a couple of key lessons to help you guys take control of your insurance strategy and avoid some of these potentially expensive surprises. Before we dive into all the fun details, we do want to get kind of a gauge from the room and see where you're at with your insurance policies. So feel free to put your answers into the chat. But the first question I'd like to propose is if you think your insurance completely covers your business or not. And this is a safe space. There's no judgments. We want honesty here. And I'm sure a lot of you feel pretty confident that, yes, we're completely covered. And my challenge to you throughout this whole session at the end is, even if you think that, it may be worth taking a second look, or if you don't know, really diving into what your policy covers. Also like to know if anyone here has had an insurance claim and was everything that you expected covered. Just as we started kind of talking through these scenarios, my specific client that I had worked with, although things ended up working out in their favor, they definitely took a second look at their insurance policy and ended up discovering things hadn't gone the way they wanted to. They might not have been covered in every scenario. And another question, is somebody in your office designated to handling the insurance, and do they really understand the complexities of the policies, or are they simply just checking that box like we talked about? And the last question that I will propose to this group is if you believe the insurance covers all the operations, including your subs. A lot of good details coming in, mixed reviews. So the good news is Peter has a lot of real life scenarios that he's going to dive into over the next 30 to 40 minutes. And I imagine that we're going to uncover some gaps or maybe some holes that you might have in your current policies. So I'm going to go ahead and hand it over to Peter to take it away with all the fun stuff.
Thank you, Carly. Everyone, my name is Peter Rasmussen. I work for the insurance partner Alchemy, but I actually office in the Buildertrend office, so very aware of the Buildertrend platform. Currently deal with a few Buildertrend builders. Always looking to be able to help out Buildertrend builders any way I possibly can. Again, I'm not here to make this a boring insurance talk. I'm going to talk about real life claim scenarios that I've seen and some different ways to mitigate the potential for being, whether it be improperly rated or not having enough coverage, whether it be on builder's risk, general liability, any other coverage lines. So where I'm going to start it out at is, again, as Carly said earlier, a lot of people that I run into treat insurance as a renewal task. They really don't understand the complexities behind it. They don't understand what's excluded from their policy. A great example of that is I had a builder out in Colorado who I dealt with very recently, who she came to us, didn't necessarily know what was or wasn't covered. We dove into her policy and found that any sort of earth movement was excluded from her policy. She had a friend over in Colorado who had a claim that was related to earth movement, where the entire house ended up shifting, foundation cracked, and the home fell over. That's not something you want to see as a builder. So that sparked her interest in getting things looked at, making sure she was covered correctly. In the process of diving into her insurance, we also found she was improperly rated. So a lot of insurance agents will rate a home builder as a framing contractor. Let's be very clear, those are not the same things. On your general liability insurance policy, there's something called a declarations page. You want to make sure you're rated as 91580. That means that you are a residential general contractor where you are operating in mostly general contractor capacity. Now, she was rated as a framing contractor. What does that mean? That means that she was only covered for any claim involving framing. So if there was something that arose out of another subcontractor's work, drywall, foundation, anything besides framing, she might not have been covered. And that was very alarming to her. There is something called a class code limitation endorsement that's put on most general liability policies that makes it to where if there is something that arises outside of your scope of operations listed on your policy, you're most likely not covered. And really, the largest thing I can drive home here is just check. It's very easy. It'll be on the declarations page of your policy. It'll show exactly how you're rated. If you're rated as a 91580 class code, you are good to go. If you're not, I would highly suggest whether it be reaching out to myself or your current insurance agent and checking to make sure they have you properly covered for what you're doing. I would say I have seen one other large claim on this in the state of Texas. There was a large, about $5.5 million home that was 90% complete. The builder thought that homeowners insurance was going to cover the home. The CO had not been issued yet. Builder's risk had lapsed. There was a hailstorm that brought down softball-sized hail. Softball-sized hail will destroy anything it hits. I live in Nebraska here. We had softball, the baseball-sized hail very recently, and the pictures were atrocious that I was seeing. Back to this builder's story, they were out of pocket over $100,000 because the builder's risk policy had lapsed. Their general liability policy wasn't going to cover damage to a project that they were working on that was new construction, and the homeowner's policy wasn't in effect yet. So again, very, very much seen a lot of these exclusions. Jumping into the second lesson, unless Carly, you have any other things to add in that first lesson.
I think you covered it.
Jumping into the second lesson is as you scale your business, a home builder who's doing $500,000 to $1 million in revenue does not have anywhere near the same exposures as someone doing 10, 15, 25, $30 million a year in revenue. On that same token, if you are doing smaller $400,000 to $500,000 homes or even $50,000 to $100,000 remodels, your exposures are much different than someone who's doing $6 to $10 to $15 million custom homes. Now, before we dive super deep into it, I did just have a $15 million home come across my desk in the suburbs of Detroit. I had to clarify and make sure it was a single family home. But again, the exposures are much different. So making sure that your insurance or your risk mitigation tactics are flowing with the revenue of your company. I would highly recommend, if you have not had someone review your policies in the last few years, reach out to my team or your current insurance agent to make sure that you're properly covered. General liability insurance policies are what's called auditable. What that means is at the beginning of the year, the insurance carrier has you estimate what you're going to do in revenue. So if it's $1 million that you estimate, at the end of the year, they're going to circle back and see what you actually did. If you did 5 million in revenue and you only estimated 1 million, you're in for a very, very large, what's called audit additional premium due. So again, I would estimate as close as possible to what you're actually doing. Now, leading into more of a claims scenario on that side of things. I had a Houston builder who was building a home and it was about 80% complete. Drywall had been done, fixtures were starting to go in, countertops were in. He had someone break into the job site. His insurance agent had told him multiple times that he was covered for anything that could have happened on his job sites. Come to find out, the person who broke in didn't vandalize necessarily anything, steal any plumbing, water heaters, fixtures, anything like that. They started a fire on the main floor in a burn barrel. Well, the fire engulfed the entire home my now client is building. He was not my client at this time, and proceeded to burn down the neighbor's home. His general liability agent assured him that this was covered. After diving further into the policy, he was not covered for the neighboring home. So your builder's risk, his builder's risk covered the entire structure he was working on at that time. However, the home next door that got burnt down by the actions that happened on this job site were not covered, as his general liability policy was improperly rated for his company's organization, which is a very tragic dealing, because he was out of pocket almost $300,000 to make sure that home got repaired and basically rebuilt from the ground up.
Insane. And going back to the story with my clients, granted, everything worked out in their favor, but I asked them, had things not gone your way, what would we be looking at? And he said, easy, 500K out of pocket.
Yeah, I've had multiple times where insureds have come to me and said, hey, I have had a couple of potential claim scenarios that have arose in the past. Luckily, they've worked out, or we've taken care of it in-house, fixed things up. Could you review my policies? Just make sure I'm actually covered. And the amount of builders I've seen that aren't rated correctly, or their revenues are so out of whack that I don't necessarily understand how it got that bad. But I've never heard an insured come to me and say, I'm so unhappy that I had a second look taken at my policy. I'm very unhappy. I understand my insurance better. Everyone who's talked to me said, I'm very happy that I actually understand my insurance, what's included or excluded. On the general liability, another exclusion I'll bring up is water penetration. What that is, whether it be groundwater rushing into the job site, whether that be water backup coming up through a septic system, that's generally not covered on your builder's risk policy. And that's something that if you are operating in a place where there is a lot of slope towards your job site, it's very important to make sure that things are graded correctly, or you're not going to end up with a foot of water in your basement. I had a client here in Nebraska. Nebraska got hit, as I said, a couple weeks ago, with some pretty severe hail. And then about a week later, I think it was also on a Thursday, we got hit with a very large rainstorm. My client went to the home that was being constructed on a hillside, and there was about a foot of silt and water in the basement. He asked if insurance could do anything about that. I told him that in his builder's risk policy, in the exclusions, it very definitively excludes any sort of groundwater penetration into the foundation, any damage associated with it. Luckily, there was no damage to framing members or anything like that. It just took a very long couple of days to pump the water out and get all of the very messy silt out.
And we've got one question in the chat, Peter, that is referring to the story that you were talking about with the
Yeah.
Houston builder. Were they rated with a code 9158?
No, so they were actually rated as a remodeling contractor. And there's also a new construction exclusion on most remodeling contractors' policies. So if you are a remodeler and you're looking to get into new construction, just make your insurance company aware of it, and they can make that proper adjustment. He was kind of excluded in a few different ways. But after talking to me, we got him set up with a properly rated policy. It was a little bit more expensive, but I told him that in the future, he would never have to worry about a potential new build or damage from one of his new builds to an adjoining property going uncovered.
And with a lot of these stories that we're talking about, it seems like where people get into trouble are the exclusions or like the really fine nuances that maybe aren't quite as cut and dry. Would you say that more often than not, when you see kind of these worst case scenarios, that it's more of those nuances, or is it kind of an even split of people just really not understanding their policy?
Kind of a few different factors there. So there are a lot of nuances in policies. That's why you have someone like myself or your insurance agent to be able to walk you through those very fine nuances. However, about an equal split on the other side is people who either don't have general liability insurance because they don't think they need it. A lot of people I hear have been 30 years plus in the business. They've never had a general liability insurance claim, and they almost think it's a scam in a way, which again, everyone's entitled to their opinions until they have a claim, and they come back to me and say, I did need general liability insurance. This was something I should have gotten. Or they're just improperly rated, whether that be they're rated as a remodeling contractor, but have gotten in a new construction in the last year and a half, 2 years, and that's just not on their policy. Or they're rated as a framing contractor and they're doing mostly general contractor work where they've had a subcontractor somehow, a claim that should have involved a subcontractor somehow skirt through to their general liability insurance and not be covered due to the class code limitation, restriction, or exclusion.
Got it. And we've got one more question regarding the Houston home. It's a hot topic. And I'm pretty sure I know the answer, but was the house next door their responsibility because the fire spread from their job site?
Correct. So what general liability covers is any sort of third party bodily injury or property damage. I'm not going to go a whole lot further than that, besides say that the neighboring house is considered third party property. It's not something you're working on, it's something that someone else owns. And the fire, which was resulting from your job site spreading to a third party property, that damage is covered under general liability.
And we've got another question from one of our Colorado attendees. In Colorado, we have several different policies canceled at renewal because those companies are no longer writing in Colorado, including our BT general liability carrier. Is there anything that is being done with picking companies at BT?
Yeah, so I'm not positive if that was if Kathy, that company was someone who I was working with or my team was working with. One thing I have seen is Next Insurance used to have a partnership with Buildertrend. Next Insurance has very much toned down where they're writing involving general contractors. The state of Colorado is explicitly difficult with general contractors due to the construction defect laws in the state of Colorado. One thing I can say is my team and I have access to, I would say 50 plus, 75 plus general liability carriers that write, whether it be exclusively in Colorado, New York City. I have not done a ton of business in the boroughs of New York City, but I do know we do have some carriers who will write there. The state of Florida can also get a little bit tricky, and we have many general liability carriers that will write in Florida. But we'd be happy to look into your specific experience after the webinar.
Another question before we move on from Michelle. If BRI excludes water penetration, are you saying that GL policy should cover it?
There are ways that your general liability can include water penetration. One thing that I would look into, if you are going to be in a specific area that you do feel water will potentially be causing massive amounts of damage, is a flood policy. Now, normally flood is just thought of in your very coastal areas, Florida, Houston, Texas, the Carolinas. However, there are still a lot of areas that water can cause lots of damage, and it is very much normally excluded on most policies as far as water damage goes.
Perfect. I think we've got all the questions on that topic. Unless you got anything else that you want to round out with.
No, I mean, I'm always happy to discuss insurance claims, different insurance scenarios, but I think we can really move into that lesson 3, talking about fixing broken approaches or really being more proactive in the insurance management of your company. Now, where I would start with that is whether it be my team or your current agent, it's always important. I know builders get very busy, especially during peak season, which thank you to everyone being here now, because this is really the start of when things start to get to ramp up and you have multiple jobs in full swing. So very much appreciate everyone's time. But really sitting down with your current insurance agent or my team, more than happy to take time to discuss your needs. But really understanding what exclusions are there on your general liability policy. Are you rated correctly? If you are rated correctly, are your revenues correct? Or are you grossly under or overrated? If you're only going to be doing $1 million in revenue, let's say, and you're rated at 5 million, there's no reason to pay that extra premium to the insurance companies. And on the flip side, also looking into other policies that might cover something you have an exposure for. If your business has any commercial autos, or if you have any autos that are being driven for company use, a commercial auto policy might be something to look into. On that, hired non-owned auto is also a very popular coverage. What that means is if your employees are driving one of the company cars, or if your employee is driving their car for work purposes, that's something that hired and non-owned auto can cover. What I would say also is looking at coverages like professional liability. So that's if you as the general contractor make any professional judgment calls that lead to a claim down the road. The professional liability covers any sort of legal defenses in that area. Where I normally see that is on the architects and engineers side. So if the architect or engineer signs off on inadequate plans and it ends up in a full structural failure or just a minor structural failure, that's where the professional liability insurance comes in very strong. One thing I would also look into is if you're doing 5, 10, 15 million in revenue, something that's always a positive is an umbrella policy. What that does is that increases your general liability coverage or your commercial auto coverage from 1 million, 2 million is the general coverage limits we see on general liability. That increases it to $2 million per claim, 3 million. Umbrellas can really go as high as you need. I just wrote a $10 million umbrella for a commercial general contractor out in New Jersey. It was actually a requirement by the owner that they have that policy. But really being able to round out your insurance and make sure you're able to feel confident in the coverages you have. And what I always like to say is there's no right amount of insurance. It's what helps you sleep at night. And if you're not sleeping at night due to insurance, my team or your current agent is definitely happy to talk about these things.
And we got another question from Peter, not you, another Peter. If they have extra coverage because their estimated revenue was 15 million, but they only end up doing 1 million, let's say, will that audit result in a refund at the end of the year?
Yeah, so there are some carriers, and I'm not going to name names, but there are some carriers that will do a return audit premium at the end of the year. Most will do full return audit premiums. If you have, let's say you're going to only do one, but you end up doing 5. However, there are some that limit the return premium to 40, 50, maybe even 60% of your premium, which one thing I'll say is 1 million versus 5 million, you're paying a lot more for 5 million. That's also a very large upfront cost that you might not want to pay at the beginning of the year if you're only going to end up actually doing 1 million in revenue. Now, I'm not saying rate at 1 million, pay at the end of the year for the additional you do. What I am saying is, let's say you're scaling down. You're going from doing 5 $1 million homes a year to one $1 million home a year. Make sure you're adjusted properly so you're not overpaying at the beginning of the year.
And Pierre, how often would you suggest people reassess their policies? Is this something that they should be doing a couple of times a year, once a century? What do you think?
So that's a great question. Now, if you're a general contractor who is doing the same thing you did last year, you're continuing to do let's say 10 million in revenue, you're doing 10 million in revenue a year, and you're really not looking to branch from the homes you're doing into nicer homes, you're really not looking to get into remodeling, or you're a remodeler and you're not looking to get into new home construction, I would always recommend just doing a very shallow dive once a year, making sure you're accurately covered. Now, 6 months into your policy, let's say that you are a remodeler and you're starting a new home. The second you decide to change up what the scope of your work is going to be, I would recommend reaching out to your insurance agent and doing a dive with them to make sure you're properly covered. On that same token, if you're doing 1 to 3 to maybe even $5 million homes a year and you take on a $7 to $10 million home, that's another thing where I would dive in, make sure that you are covered correctly. You have the proper coverage limits. There aren't any exclusions that are poking out that might exclude larger residential construction. One exclusion I see a lot of is tract housing exclusions. So if you're doing more than 15, maybe sometimes 20 homes in the same neighborhood, that's an exclusion that I see coming up more often than not. Is a general liability carrier will exclude tract housing work. So if you're doing more than 15 homes in a neighborhood, I would make sure you don't have that tract housing exclusion. There is a caveat to that exclusion where if you offer structural warranties on your jobs, that tract housing exclusion is removed from your policy. Or I guess another caveat, if you're going from doing 1 to 2 homes sporadically throughout a neighborhood and you get a call that you can do 15 in a neighborhood in the same year, I would make sure you also don't have that tract housing exclusion on there as well.
So it sounds like whenever there are significant changes to the business model, that sounds like a really good time to give your insurance agent a call to double check to make sure that you're fully covered.
Completely agree. Or let's say you decide to bring on 10 field employees and you used to only have two. I would make sure your workers' compensation policy is updated, your commercial auto policy is updated if you're bringing on any new vehicles or you have any new employees driving. Would definitely make sure those are updated.
And we've talked a lot about, different stories where builders thought that they were covered and kind of like led astray by whoever their broker was or whoever they were working with or trusting at the time. So what suggestions do you have to our listeners on how to really vet out their broker and ensure that they're sitting in a good place with confidence?
Yeah. One thing that I would say is general contractors and especially home builders, it's a very specific niche of insurance, and it's very difficult to understand all of these exclusions. What I would make sure of is that your current insurance agent, or if you come to uh, my team is very heavily involved in contractors insurance. That's what we live and breathe. We do it every day. I would make sure your current agent is somewhat involved in the construction industry, whether that be having other construction clients, being able to potentially go and your current agent goes to HBA meetings, something that shows that they are currently involved in construction insurance. I've seen it time and time again where your family friend is an insurance agent. They deal with banks, lawyers, some sort of professional service similar to that, and they'll write your insurance just out of a favor to you. But at the same time, they don't necessarily understand the contractor specific language in some of these policies. So my recommendation to everyone here is make sure your current insurance provider specializes in construction.
And out of curiosity, with Buildertrend Insurance, is there any type of ongoing support or outreach that comes from your team once we do sign a policy?
Yeah. So once we do sign a policy, so if we sign you with a general liability policy, we make sure to check in at least once a quarter to make sure A, you're happy with our service. Make sure you're not somehow displeased. B, make sure that no scope of operation has changed. So if you're a small remodeling contractor, we want to make sure you're not taking on some new home construction where there might be a current exclusion on your policy. And at the same time with builder's risk insurance, if you have a builder's risk insurance policy with us, we want to make sure that A, the budget has not changed on that project. There are a lot of midterm budget changes that I've seen that put the actual project over the coverage amount on that builder's risk policy. The last thing you want to do is have a builder's risk policy for $1 million and your budget's now 1.5. You don't want to be underinsured there. So my team is very active with the outreach and communication to our clients to make sure that A, our clients are satisfied, and B, they have the proper coverages for their current business operations.
Amazing. Now, to kind of round out this section, we've talked a lot about a lot of false assumptions that builders, think when we talk about insurance. What would you say are the two biggest false assumptions that you see when it comes to insurance coverage?
I would say the largest false assumption is that you are always covered. Now, if you have a very robust insurance portfolio and you've gone over it with your insurance provider, there's a much greater chance that you are definitely covered. However, I do see a lot of people who have a false confidence in their insurance agent, their insurance company, or their insurance portfolio that they think they're covered, and we'll read through it and see that there's some sort of a scope of work or a class code limitation where there might not be coverage, or an earth movement exclusion where there might not be coverage. Every day we're running into something new as far as different exclusions that might not provide coverage for all your operations. I
Oh,
would
that's
say the
really good.
second one. Sorry, I was going to say the second one is going to be on builder's risk insurance. I see a lot of people that come in and request one limit. The budget increases to 20% more, and they automatically think that builder's risk coverage increased. Or another, I would say another complexity I see on builder's risk insurance. When you're dealing with any sort of bank or lending institution, the bank and lending institution has very specific requirements for what that policy has to be and how they need to be listed on that policy. I would say what my team spends a lot of their time doing is making adjustments on that builder's risk policy, whether it be increasing coverage, lowering deductibles, or adding on a bank or lending institution as a mortgagee, additional insured, something to that extent, to make sure that all the T's are crossed and I's are dotted.
Speaking of I's dotted and T's crossed, this will be my last question before we lead into our overview. Do you think that there's any value of bringing in a second set of eyes, like let's say a legal party or just some outside party to give it a once over to ensure that you are covered? Or do you think if you've got enough confidence in your broker that, they'll give you the answers that you're looking for?
I would say it never hurts to bring in a second set of eyes. Now, whether you have to listen to the second set of eyes you bring in or not, that is completely up to you, but it never hurts to get a second opinion. Now, I've seen a lot of builders bring in their attorneys to make sure that their attorneys go through the policy contracts and make sure the policies don't have any gaping coverage exclusions. I've also seen where builders have brought in a second insurance broker to run through the quotes that whether it be my team provided, or I've had a lot of builders come to me with quotes that other insurance groups have provided where they just want a second opinion. I'm always happy to give a second opinion on any quote. It would be great to earn your business, but if you have a current insurance agent you are happy with, I'm more than happy to do a quick review of your policies to make sure you're covered.
It's amazing. Well, I think this is a good opportunity for us to kind of do a nice overview of everything that you just went through within those key lessons.
Yeah, no, I mean, that sounds great. Again, I see claims time and time again. The number one claim I see would be small theft claims on the job site, whether that be water heaters getting stolen, whether that be materials getting dropped off on a Saturday morning when nobody's at the job site and a passerby decides that $15,000 worth of shingles or insulation would look great in the back of their truck and not on your job site. Making sure that you have accurate job site security. The number one thing I see up and coming is a lot of wireless cameras. Wireless cameras are a lifesaver when it comes to securing your job site, making sure that you're able to see your job site on any given day. I would say that in any instance where you feel you might not be covered, don't hesitate to reach out to my team or your current agent just to go through it. They're happy to talk through your coverages with you and make sure you're properly covered. What I also like to say is there's no such thing as a dumb question when it comes to insurance coverages. Everyone has a different understanding of insurance. And at the end of the day, for me and my team, we always make sure our clients are as educated as possible on the policies that they have currently or they have placed with us.
And we did get a question, and for everybody in attendance, feel free if you have any specific questions that you'd like to ask Peter or I, we're welcome to answer those live now. But Christy was wondering on builder's risk policy, should we be getting coverage at the sales price or the build budget? It's a great question.
Yeah. So generally speaking, I always recommend that builders get the builder's risk policy at the build price of the home. Now, sales price, I'm assuming you're also including the land in that price. The land does, I have rarely seen where land comes into play as far as builder's risk claims go. Now, there are specific cases in mudslide scenarios or very, not very stable earth environments. And that's why I always find it important to have earth exclusion or earth movement included on your policy, your general liability policy, to where you're able to be fully covered on something like that.
And Christy did mention that her agent always asks for the sales price. Is that common?
So the sales price of the home is something that structural warranty is rated off of. Now, it might be a thing where you could be getting overrated on some of your builder's risk if they're talking about the sales price of the home, because you're including land in there, you're including your profit, overhead, things like that that you might actually not want to have covered.
And we've got another one from Jody. Is builder's risk only for new construction?
So no, great question. This is actually something I get a lot of. So builder's risk is not only for new construction, it's for renovations as well. Now there's a couple different ways you can cover a renovation on builder's risk insurance. You can either cover just the work you're doing to the home, or you can cover the existing structure and the work you're doing. Where I would recommend covering the existing structure is if you are doing very large structural changes to a home. So if you're doing foundation underpinning, if you're moving load-bearing walls, if there is anything that you're doing that might involve the home somehow collapsing or becoming structurally compromised, that's when I recommend putting the existing structure coverage onto the builder's risk insurance policy.
And we've got Peter again. Let's see if I have builder's risk policy at sales price and there's a total loss due to fire, will the policy pay out the sales price or just the rebuild cost?
Yeah, so builder's risk is meant to get you back to exactly where you were. So in the event that you're 50% complete with a home and you have a total loss, I'm talking tornado comes through, wipes the entire thing out. Hailstorm comes through and takes it down to where you have holes through 2x4s, which I have seen. There was a hailstorm up in Sioux Falls where I had a house that was Tyvek'd in. That's the only total loss claim I've ever seen on a builder's risk policy due to hail. There was softball sized hail that punched holes through the OSB and some 2x4s. It looked horrendous. So it will pay out to where you sit in the job. Now, on the sales price side of things, they're not going to cut you a check for the full price unless there is a total loss claim. In the event there is a total loss claim, they will look at what your expenses incurred were, along with the overhead that you had as well. The land, again, won't be covered, and the land is normally in that sales price.
And from Glenn, does general liability insurance cover schedule risk claims?
I would have to get a little bit more information on what he means by schedule risk claims. So as far as builder's risk, one thing that people sometimes do is they have what's called a reporting form policy, where you report to the insurance. You have one builder's risk policy for all of the jobs you do in any given year. And you report to the insurance company, whether it be monthly, quarterly, semi-annually, or annually, all of the jobs you do. So that would fall under the builder's risk reporting form policy. But Glenn, again, after the call, I'm more than happy to dive in on what the schedule risk claims question is, and we can get you the answer you need.
Perfect. And we do have some more time for additional questions if anyone has one. But to kind of start to round things out, really appreciate everybody asking the questions they did and sharing their experiences. If one person has the question, chances are all 25 of you have a similar question. So it's been really great to obviously learn from Peter and his expertise, but then also get to hear from our attendees' experience and really have some really solid takeaways coming out of this conversation. And kind of the overarching theme of this entire session has been the importance of insurance and how important it is to have it when you don't need it, instead of waiting until your oh shit moment. I really, really need it. So we really, really appreciate everybody joining today. And again, if you have any additional questions before we get wrapped up, feel free to throw those in the chat. And it looks like Peter actually provides some additional context. So just to clarify, is there any circumstance where the builder's risk policy should be at the sales price? That includes the land value, given that you'll never realize a benefit for the land value.
I would always recommend insuring it at what your cost is into the project. So, and that's from ground up. I would not recommend putting the land price into that builder's risk policy. You'll just never see any value out of it, and you'll end up paying more than you should for your builder's risk insurance.
That's great information. Well, again, we're hanging on for a couple of minutes, so I'm trying to kick the can down the road for additional questions. But again, really appreciate everybody attending today. I'm sure it wasn't the most riveting webinar to sign up for, but hopefully we peppered in some fun stories that don't leave you too anxious coming out of this conversation, but hopefully makes you feel empowered to either give your broker a call, get a second set of eyes on your policy, or just really understand what is covered and maybe some of those holes or gaps that we've kind of poked in today's session of where you guys can have additional coverage. So again, thank you so much, and do want to remind everybody to keep an eye out in your inbox because we will be sending out the recording, a downloadable guide with key insurance tips and common exclusions, plus a link to book a time with Peter and his team. And again, if that's, hey, I want to look into a policy, or I just want a second set of eyes to give me a little bit of confidence, they are available for that. And that email should be coming out tomorrow, so don't be sitting with bated breath today. But again, really kind of our challenge to you is to, if you're outsourcing your builder's risk or your general liability, to really own that process so you have confidence that you are covered in the worst case scenarios. So thank you again, and feel free to reach out to Peter with any questions. You'll obviously be very, very well taken care of, and appreciate your time today, Peter, and everything that you've provided to myself as well as all of our listeners.
Of course. Thank you very much for having me, guys. Again, if you have any questions, please feel free to reach out. As Carly said, insurance is not something you think about on a daily basis. If it is, maybe you want to get into insurance, but it's always for the worst case scenarios, and that's something we hope you never have to deal with.
And we do have Michelle coming through with one last question. I've searched declaration page of our general liability and don't see a rating. Better yet, what is the framing code so I can make sure we aren't improperly rated?
Yeah, let me make sure I'm giving you the correct framing code here quick. So the correct general liability class code you should have is 91580. And then your subcontractors should be rated on, if you're doing single family home construction, 91583. Now, the general liability class code I see for framing is either 91342, or there's another one that I just can't think of off the top of my head. So apologies there, but I can follow up with you on what the framing class code is.
And we've got a couple more getting peppered in, so stick with me. But our guy Peter, is there a limit on the overhead that you can include in the builder's policy?
So no, there's a separate line item coverage inside of builder's risk insurance that's called soft costs. Normally it's separated out, and overhead is generally included in the soft costs coverage. And at least on the policy forms I deal with, you can have that overhead or the soft costs coverage go as high as you would like. Now, again, that's something you're going to have to pay a little extra for, but there's really no sort of limit on the overhead you can insure.
Excellent. Another one, if I am building multiple houses, do I have to get insurance for each one?
Great question. So if you're doing builder's risk, generally speaking, is for one single location. Now, what I brought up earlier with the reporting form, a reporting form builder's risk insurance policy is one policy for all the jobs you do, and there's you schedule each individual job on that policy. So a little bit of a confusing answer, but generally speaking, when you're dealing with single shot builder's risk policies, you have one policy per project location. Now, as far as general liability goes, if you have a if you have a properly rated general liability occurrence policy, that is going to cover all job sites that you're currently and actively working on.
And Miguel is wondering, why would a broker place you under the framing code if he knows you're a general contractor?
Even a better question. So brokers tend to deal with, so myself and my team, we deal with a lot of very specialty insurance companies that only write construction or home builders. Now, there are a lot of other insurance companies who love to write artisan contractors, so framers, drywallers, plumbers, electricians, you name it. As far as artisans go, they'll most likely want to write it. They, however, very much do not want to write home builders. Home building is a completely different risk. Now, some insurance brokers will just rate you as a framing contractor. It'll save you premium in the short term, and they'll be able to place you with different insurance companies that might be a little cheaper, but you are not properly rated.
Well, I think that brings us to all of our questions, unless we get another one that comes in. Peter, my guy. I didn't know, sorry, I didn't know exactly. Did you say that if doing multiple homes, best practice is to have a builder's risk policy for each property or do a reporting form deal?
Yeah, great question. So reporting forms are great. They're a little bit more paperwork on your side. What I recommend is if you're doing 14 or 15 spec houses, or really anything under $1 million, reporting forms are fairly easy. Now, if you're doing less than 15 homes a year, or if you're doing homes over $1 million in value, single shot's the way to go. You're not going to see a whole lot of cost savings on the reporting form side at that point, and you'll also have really a solid coverage option when it comes to those larger homes or just the few homes. You're not going to see really a cost savings moving to the reporting form, and it'll be a little bit more work on your side.
Perfect. I'm going to hang on for another minute in case Peter or anybody else has a question. Really, really appreciate all the commentary after the fact. Makes it a little less awkward for Peter on screen and I to riff back and forth. So
No, I love the questions. This is was very there was a lot more participation than I originally expected with insurance, because again, insurance can be very boring, and it's not something that people want to talk about on a daily basis.
well, it looks like people are starting to dive off, and I haven't seen any other questions come through. So we'll go ahead and get things wrapped up. But just as a final send off, appreciate you guys so much for joining us. As a reminder, you will get the recording, the downloadable guide with tips and tricks from Peter. So look out for that tomorrow, and join us next time for our next webinar.
Thanks, everybody.
Thank you.